I will say this is that as we get into, so wherever Bitcoin bottoms out, whether it's 17.5 where it was, or 12 or 10 or 5, or who knows where, I do think the next bull run will be the big one. I think it's kind of an interesting period in crypto because we've just seen that big flush that took us below 20,000 to about 17.5. And then very quickly, the next day, we recovered back above the 2017 highs. So I think for me, that's the line in the sand right now, is that you can go below a previous pivot high, a major level like that, but the recovery is important. If we didn't recover and we were still below that level, it would signal near-term weakness. Right now, I actually think that we're in a position to maybe see a bounce over the next week or two, potentially back to 25,000, maybe as high as 28 plus thousand, before, unfortunately, we probably see a little bit more downside. Right now, there's kind of this time factor involved where we got below that previous 2017 high. We recovered with a reversal candle, which is a technical bullish signal. And now we've just been going sideways. It's been very, very eerily quiet in the crypto markets, but we've started to see some altcoins starting to pick up. You know, for instance, we've seen Polygon have a monster move. In fact, let me bring up that chart here on Polygon. Okay. So you can see this move on Polygon. It's just been ripping up to the upside. You know, it got as low as about 30 cents. So it's up about 100%. And then if you look at other names, like even Solana has been showing us some relative strength, breaking up here off of these recent lows. So even though Bitcoin hasn't started to really rip to the upside, some of these more beaten down altcoins are. And I look at them as kind of a little bit of a leading indicator. I think if you go back to Solana, for instance, when Bitcoin was topping, this was still holding up relatively well before it really started to fall dramatically. So it makes sense to me that these could be showing a little bit of a risk on kind of take on the crypto markets. And that could be telling us that Bitcoin could likely get a bounce in the next week. In addition, I think it's important to recognize that the NASDAQ 100 is having another monster day. We know that, you know, as much as we don't in the crypto markets like to say that crypto and stocks are connected, they are, frankly.
They're very correlated.
Yeah, it's definitely a risk on trade, whether it's technology stocks or crypto. And therefore, when you're starting to see the NASDAQ rip up, it's telling me that the risk on environment is starting to percolate again. And that's a positive for Bitcoin. One of the things to keep in mind, we're coming into the July 4th holiday week, next week, going into the weekend. And oftentimes that is a period where you'll see these type of moves get ready and kind of initiate. So I would be kind of surprised if we don't have a move up on Bitcoin in the next week, week and a half, back to at least 25,000. If you go back to last October and November, everyone was always asking me, well, what's the catalyst for this kind of flush out? What's going to happen here? And one of the things that I was comparing the crypto markets to was the dot-com bubble. Right. So this is taking us back to the late 90s, early 2000s, where you had a very similar scenario with dot-com companies where there were so many of them. And I mean, I kid you not, some of these dot-coms were like run out of their parents' basement. They basically did nothing, but they got ridiculous valuations. You would see a stock that was a few pennies a share go to 10 cents, go to 50 cents, go to $3. I mean, it would become a mega sized company that almost did nothing and really had no business being a legitimate stock. And we saw a lot of this in crypto, right? You've seen so many coins. I mean, now what do we have? 20,000 coins out there, and it's just not a healthy environment. So you know, one of the things I said back then is you need a deleveraging event and you need a dot-com type
seven below 20,000. I was looking at coin market cap. So you were like on the money. It's like 19,993.
Yeah.
But you're right. I get what you're saying.
Yeah, I mean, the bottom line is there's not space. I mean, think about overpopulation or the Darwinian impact. And I love referring it to Darwin and kind of survival of the fittest in terms of genetics, because it really does play a role here where there's just so much and you need to see that washout occur. So the fact that we're seeing Terra Luna collapse, we saw the UST, we saw the Celsius. I mean, this is exactly what actually should be happening. And it's not over yet, right? I mean, when you really need to see that when the dust settles, I mean, really about only 5 to 10% of cryptos should really have a functional, decent market cap after this. You know, otherwise, I just don't think it's over yet. I think that the 4-year cycle has proved itself once again in that, 2009 creation, 2013 highs, 2017, now 2021 was the last high. So as of now, all we have as technical, traders is to say that, okay, 4 years is what the cycle is, which kind of dictates that we should bottom out. Usually Bitcoin past cycles has bottomed out in that first year, that 12-month period. And then it kind of has a choppy period for about 6 months afterwards, before the next bull run starts. So, we're not at a year yet. So it still tells you that there could be some more downside. And then even after a year, you have to figure 6 months of choppiness before that next bull run. Now, my only fear, and this is kind of the unknown, and listen, no one knows this, is that this is the first period of Bitcoin where the Fed is aggressively tightening and you're seeing this kind of, inflationary pressure forcing them to tighten and keeping them from printing at this point. So that's the unknown. And honestly, I'm not sure. Does that mean that the bear market in cryptocurrencies will last longer? It might. And again, and I wish I knew the answer to that. All we can go by is kind of past cycles, which are not necessarily totally applicable. But I will say this, is that as we get into, so wherever Bitcoin bottoms out, whether it's 17.5 where it was, or 12 or 10 or 5, or who knows where, I do think the next bull run will be the big one. And I know that sounds crazy because we've already seen big runs in Bitcoin, but my guess is when the market starts recognizing that the Fed is going to kind of do this whack-a-mole with unemployment and then inflation and then unemployment and inflation back and forth, there's no good end to this. And that's where Bitcoin is going to be, that next big bull run that easily takes us north of 65 and maybe 100, even a 250 or 500,000 per coin. Now, again, I think by this point, a lot of the alts are gone. You probably have a standard kind of maybe 50 cryptos that are now surviving. The top couple will be the blue chips like an Apple or a Microsoft type play. Those would be Bitcoin and Ethereum. And then we'll have to see how it all plays out after that. But I do think the next run is going to be the run of mass adoption, where the public starts to recognize the end game for the US dollar and really for central banks around the world that are just doing this and repetitively printing every time we get into this mess. But I think one thing to just kind of keep in mind is that every investor is swayed by emotion. It's so hard to control. The markets almost work in that way where they're going to push you to extremes. What I would always suggest, and this is kind of the way you kind of eliminate emotion to some extent, is number one, never invest more money than you can afford to lose, right? Because that's going to make you more emotional. When you overinvest, you're like every little tick in the chart, you're like, oh my God, and then the other thing is when you're in the money, just make a plan, turn off the computer, don't look at the charts, go to the paper and say, all right, I have X amount invested in Bitcoin. Every 5,000 up, I'm going to just take 10% off the table and just kind of take it. And you have to abide by that. Finding these rules and putting these rules in place, they tend to take out that emotional sway where, because you're right. I mean, you went on Twitter when we were at 65 or 69,000 and, plan B was saying by the end of November, 100. I mean, there were so many things out there that just seemed so realistic and so like, oh my goodness, I can make more money. That it's just a tendency for us to want to believe it. And there's nothing wrong with that, except that it does get us into trouble. So we need to remember for the future to kind of put things in place that protect us. Remember, a pro trader is always looking at the negatives. Usually retail investors are always looking at the positives. So when I analyze a chart, I'm saying, okay, that's good. But let me really scour the charts and find out where things could go wrong. A retail investor is much more apt to say, oh, that looks great, I'm going all in.